Yo, what is up, guys? Camilo here. I hope you're well. So the markets were pretty muted today, and there wasn't pretty much any volatility or price action that happened. All right, we're still coexisting, not coexisting. We're still existing underneath the 50-day simple moving average, and until we start rallying above it and holding it as support, right now is showing as resistance. Then we're still going to operate under this interpretation that the markets have reached the top in the primary degree wave one, and we're going to head lower into the primary degree wave two. Now, I've said this before on the channel that there was a possibility that the markets had reached the top. There was a possibility that the markets had reached a near term resistance that will allow us to roll over. Now, we needed a catalyst for that, and sure enough, we got it. There's fears of the Evergrande scenario out of China. How that affects the markets is yet to be seen, but because we don't really know the extent and the depth of the damage just yet, all right, we're probably finding that out this week. We also had the Federal Reserve or FOMC meeting minutes tomorrow. So there's a lot of uncertainty still happening in the markets right now. We still have the variant going on. We still have a lot of stuff going on. We still have the debt ceiling. We still have, there's a lot of uncertainty. And with that in mind, that gave us sort of the excuse, rather, in quotations, as I'm doing quotations right now and you can't see me, that markets were taking that as an excuse or as a reason to roll over. All right, maybe, I don't know. Like I said yesterday, this is my interpretation and this is what we're going with. But the truth of the matter is, if you follow your price action and you follow your chart analysis, then that's what you can do. And so what we're going to do moving forward is that until we're proving otherwise, we're going to follow this interpretation that we're still going to head on lower. I will show you the invalidation levels that we're going to look for in the event that we push through. Then that's likely the scenario that the bullish interpretation is still at play. But for now, that is less likely. All right. And you may be asking yourself, but bro, look, we existed underneath the 50-day simple moving average, all right, on September and October. Why is it different today? And it's a bit different because the COVID lows was just set in. All right, and we hadn't broken new highs just yet. So the hype was still there to take this market on higher. And so that's one of the reasons, right? Mainly, I suppose. And so once we broke below the 50-day, we hover ever so slightly above the 200, but we broke above it and we rallied. Now, what are we going to look for coming into tomorrow? The question is, are we going to retest the 200? Are we going to go below the fourth wave and continue on this rally down to the second wave of the primary degree? We yet to determine that. But what we got to do is analyze the 30-minute time frame where we have dissected that wave interpretation. All right, so let's dive into it and let's take a look and review my game plan coming into the remainder of the week. So from September 2nd high, we went down in one. ABC pulled back into the wave two, acceleration gap into the wave three, 200% retracement support, and now we're in the makings of the wave four. All right, guys. So look, wave one. Wave 2 found 50% retracement. That's appropriate for a wave 2. Wave 3 found 200% extension of wave 1 versus wave 2. That's appropriate. So we're showing three already characteristics of an impulsive structure. The descent of this decline is showing as an impulsive structure as well. Acceleration gap, impulsive structure. So this whole idea here, this thing here, this price action here is indicative of change in trend. All right, for the short term, for the time being. So we need 5 waves to complete the A wave. Now, what is the game plan coming into tomorrow? Should we remain south of 443.22, guys? South of 443.22. Why do I say that? Because if you understand Elliott wave guidelines, and if you know of Elliott wave guidelines, then you know that wave 4 cannot retrace in the territory of wave 1. If that's the case, if we see price action go above wave 1, then this interpretation is valid and likely a different type of scenario. So that happens, then we'll determine it. But look, let me show you guys what I showed you yesterday. If that's the case, right, then there's a small probability that this will be the wave count. So up in 1, down in 2, 3, 4. So this section here is exactly this section here. That will mean that in this bullish interpretation, we are existing within the wave 4, and we still have another 5th wave to go for the intermediate wave degree 3. Right now, this is down in A, up in B, down in C. It's appropriate, pushing it. Right? It's not too quite convincing because, as I mentioned, this has the characteristics of a impulsive structure. Wave 4s are not impulsive, guys. Wave 4 are corrective moves. Now, another thing is that, right, per the guideline of alternation, wave 2 and wave 4 do not alternate. They're both directional. All right, so that's what I'm saying. That this will be pushing. And now I won't fall too heavily on this wave count here that I just showed you guys. I'm still operating under this interpretation. But should we fail to break, should we continue on higher, then I'll have to rework the other alternative, which I have in the back of my pocket, but I'm not going to present that to you guys just yet. We got to take it a day at a time. All right, now, where am I going to look for a position? You may be asking yourself, and here's the answer. Join Trending Waves. The link to the Discord group is the link to the Discord group is pinned down in the comments section. All right, it's totally free. Join. You'll see that we if we release any trades and whatnot. That was just a quick yeah, that was actually good. But excuse me. Whoa. Yeah, but for real, subscribe to the channel. Give me a thumbs up if you're enjoying this content so far. Click on that bell notification icon so you'll be notified when I upload these videos, and join Trending Waves. It's totally free for now. It's limited edition, I call it, right? It's not gonna remain free forever, but take advantage of it for several days. Now, up in A, down in B, 50% retracement support, A, B, C, and now we're in the C wave. All right, it appears to be. This can still be prolonged. Who knows? Tomorrow we have the FOMC meeting, so I suspect that we may see the following. I mean, like we've done in several other meetings. We may still hover, we may still just trace sideways up until the meeting minutes and the press release, and then we may get a pop. Okay, if we do that, then our price targets will be 442 and 438, at which point there is a very, very good opportunity for a short trade to the downside. Why do I say it's a very good opportunity? Because your stop loss should be right at or above the wave 1, which will invalidate the wave 4 and will invalidate this whole wave structure. Thus giving you, if it doesn't invalidate, thus giving you a really good zone of reward. All right, I won't call out where that target is just yet until we start seeing price action coming into tomorrow, but that'll be the game plan, guys. Ladies and gentlemen, that is the game plan. So as I said to you, it is important for you to be in Trending Waves because we analyze this price structure every single day, twice a week. We upload these charts, we analyze them, and we monitor the markets heavily. All right, we're not over trading, we're just monitoring it and waiting for our opportunity to unfold to take advantage of a trade. Over to the Qs. The Qs are also displaying the same interpretation. So down in 1, up in 2, 618 retracement, down in 3, 200% extension, A, B, and C. We're looking for a pullback into the 372, 369 area to take advantage for a short opportunity. Now, price action must remain south of 373.15 in order for us to validate this count and consider that we're still in the wave A, then wave B, and then wave C. Now, the larger and the bigger move that that we could take advantage of if we've missed this opportunity here and we just head on lower instead of pulling back into this the zone, is that we wait and see this whole wave A complete. We wait for the 3-wave pullback to unfold, and this is the zone where we will take a short trade that will yield us a bigger return to take us down to the C wave of the primary degree wave 2. All right, guys, so you have to think about this as a train station. You have 2 stops. All right, first stop is here, you miss it, you wait for the next stop, you wait for this thing to unfold, get clarity, get confirmation, 3-wave pullback, get support within the fib zones that are appropriate for a wave B pullback, and then that's your next stop to get on board for the profitable train. Next stop, profitable train, guys. All right, so SMH, let's take a look. SMH, we're still within the wave 2 pullback. All right, I mean, look, I wouldn't say I haven't really looked at it because we're still tracking this count, but there is an alternate count suggesting that the wave 1 is still ongoing, or wave 2 rather, sorry, is still ongoing. But for now, if the markets do break that invalidation, I mean, we were waiting for this pullback in the wave 2. We've reached the 200% extension of wave A versus wave B, but that is pretty uncommon for wave C pullback to go this deep. Now we're pulling up higher, but it looks like it wants to roll over. If that's the case, then we're still in the wave 1 or wave 2, and that wave count is only preview to the members. So just keep in mind that there is another interpretation. So IWM, I have that bullish or that bearish interpretation in the IWM. IWM, we're still looking for the downside. So From July 19th low, we went up in one, right? This was a triangle, so it's valid. ABC pullback into wave A. B, we're looking for 5-wave decline in the wave 2, right? A, B, and C flat to come down between the 1618 and the 100% extension. Right now, we found support between those two zones, but we're looking to retrace if we don't break above this zone here of resistance. All right, guys. So just be focused mainly on the Qs and the SPY, okay, relatively, because those are the ones that are going to let us know the direction that we want to take in the markets. All right, guys, be patient, stay safe, stay well. Give me a thumbs up, join Trending Waves, like that video if you enjoy my content. I appreciate everybody who subscribed. Continue subscribing. So I'll see you guys bright and early tomorrow. Peace out.